Hey Dale,
Hi, Steve. Thank you.
how are you?
I'm fine. Thank you so much for joining us today, especially since you don't have any kind of axe to grind. Your website is free for people that are interested in learning about trading. So I appreciate you taking out the time. You know, most people have agendas when they want some visibility. They have some kind of service to sell. So shows your spirit. Are you planning on
It's
marketing your?
it's a spirit.
Yeah.
It's always been a hobby. So site's always just been going 6 years now. Kind of the same deal all the
What
way.
kind of traffic do you get and membership do you have?
Did you say traffic or?
Traffic and perhaps it looks like you have people who post their ideas there, so you have a little bit of a community there.
Oh yeah. There's a board that I set up on the back end because I get a lot of questions via email.
Yeah.
So I figured it just made a lot more sense to have a board where they can get asked and helps out everybody in the process. Because I would answer all these emails and they just sort of get lost in the wind. So yep, yeah, there's a board there.
Okay. Steve goes by his Steve W. He remains anonymous and in the shadows of the Twitter sphere. You know what I'm going to do,
There's
Steve
no shadow.
W? I'm going to divulge your identity right now.
That's
April
you,
Fools.
you,
April Fools, Steve.
yeah. I was gonna say, actually, I was wondering whether or not I was lucky or unlucky to be your April Fool's guest here. I don't know about that.
So, why don't you tell us about how you got involved in the trading business? How did it begin for you? And did you have any mentors or influences that um, you embraced and had a big impact on your trading?
Yeah, I mean, trading in general, I've been asked this quite a few times before, but I mean, this just finance in general, I kind of stumbled into. I basically, excuse me, started in college working on a trading desk for a bank, just basically running tickets. I was a clerk, and one thing led to another, and I don't know. I just basically hung around in analyst positions in all sorts of different capacities, and then I ended up on an FX desk, and
Wow.
yeah, onto CTA, and then just recently, I'm basically working for a prop fund now.
Okay, so
So
you get a percentage of profits for the funds that they put up.
correct. So you basically have to post up to a certain number every year. It's done on a yearly basis,
Hmm.
and anything over that number, yeah, you get a percentage of. Is how we're structured, and then just a base salary, but really it's all about the bonus. So your performance.
Okay, and you tell me that you mainly do focus on FX. Were you able to work out the Skype so that we could take a look at some of the charts? And
Yeah, I'm actually I am at home today, like I was
yeah.
saying. I'm actually talking to you on my iPhone right
Oh,
now.
okay.
So, but I mean, I can talk numbers and everything, but I've got a computer in front of me. I was having issues with it though, with the headset and all that.
Okay. So we have the ECB coming up. You're mainly a technical trader, and what do you do in front of red news like the ECB? Do you stand aside or do you hold positions into a news event like that?
Well, it depends what it is, where I'm at, and a whole bunch of other factors. But normally, I'll be generally flat going into heavy, events like that. My horizon is just, I feel like it's shortened over the years, but it's just a lot more comfortable for me. It's what I can do and what I can manage, trade wise.
You were telling me you're
And
mainly day trading.
mainly day trading now, yeah. And I mean, swing positions come into play, but they're not usually open for any more than, I mean, 16 hours. I think is sort of a stretch for me even.
Okay.
So unless there's just total dead volatility, they'll I'll let things run longer, obviously, but or if I've got a target that's clear and obvious, just hasn't been hit yet or something like that. But yeah, going into the ECB, I'm basically flat. They're easing scenario basically being priced in. Big question: are they going to do it or not? So I've basically got the same question as everybody else on the planet. So
Do you think that they're going to be dramatic enough to go to a negative interest rate or at least talk about it?
yeah, I don't know about that. I really don't know. And so
That's a good answer.
I don't.
Who
Yeah, I mean,
does?
I could exactly. I mean, I could pretend I could, say something. That's what I was about to say. When you're going into events like this, I like to be kind of in check on both sides of the trade, basically. And because, as long as I have stalling points, no matter what direction we head in, I've got, something to work with, basically. But, you just don't know. And I never really set up anything too far in advance for that reason, because a lot of that effort, not only futile, I think is just dangerous. To have an assumption in going into an event like that.
So, what type of time frame for your scalps are you mainly focused
Um, I mean, I pretty much start around like a 4-hour chart, and I end up on fives, and I go down to smaller time frames. Excuse me, I've got some kind of thing here today. Sorry about that. Yeah, on smaller time frames, I'll pretty much drill into, just for the fact that smaller time frames hide a lot of detail that you don't necessarily see on larger time frames. So smaller time frames kind of bring in that that level of proximity that you can execute at the best. So for instance, we had a target on euro. If I wasn't on a 5-minute chart, I never would have seen how accurately I can get these things down to. So our recent low is, I think we were off by 2 ticks or something like that. And to get that kind of level of, precision, you need to get down to a smaller time frame.
Okay. And
So,
you embrace any type of methodology, Elliott, you use fibs. What are your favorite technical tools for trading?
I use Fibonacci extension the most. What we do, if you go on the website, there's a lot of recent articles about it, but we do a lot of measured movements, or I do a lot of measured movements. And the reason for that is we basically want to come up with a target, because the target is the backbone of the trade. That's what you're trading into. That's where you're going to find your money. And to come up.
Something happened with this call. You there? You there, Steve?
Hey there. Sorry about that.
Okay.
I had a call coming in.
Yes.
Did you? Sorry about that.
It's okay.
Yeah, where did you lose me? What was I
We're
talking
talking
about?
that the meat of the trade is knowing the target, and you use extensions to come up with them. What extensions do you use? 1.23, 1.618. What do you find? And does it matter? You use different extensions for different pairs because of their different personalities?
Not so much pair specific, but more of a environment situation specific. So, in other words, there's a number of different ways that you can calculate these types of movements. I'll go for 1.618, which is basically the mother of all Fibonacci, first and foremost, because that's the one that really gets hit the most, and it also offers sort of a reasonable risk reward from your entry target, or at least the way I get into positions. But
it's amazing how that number shows up. In fact, I'll admit something on April Fool's Day. I don't know, it was probably about, I don't know, 6-7 years ago. I had my testosterone levels checked and they were low. And
well,
yeah, I know. Isn't it? It's kind of, we morphed into a Dr. Phil show.
yeah, where we go
All
here?
right.
What's
Well,
going
anyway,
on?
what I'm saying is the gel that I was using, they actually increased the potency from whatever it was to 1.62. So you even see fib numbers used in pharmaceutical formulations. What do you think of
Right.
that?
Well, again, it's a natural number. It exists, for the reason it's there. Everybody knows. I don't really know how to.
How old are you, Steve W?
How old am I? I'm in my 30s.
All
I'm in
right.
the
Well,
30s.
okay. Get back to me in about 15 years, and
I will.
we'll be
Okay.
able to talk about RT readings. Okay.
think that should be on a different website, maybe.
What's going on with U.S. dollar yen? There was a lot of bullishness going into 2014. The yen crosses were the superstars last year, and stock indexes continue to make new highs without the yen confirming or even taking out the high from late last year. The yen crosses, same story. Where are you at on the yen and the crosses?
We were actually just looking at seasonal trades this morning on dollar yen because right around this time of year, you usually see sort of a transition phase going on.
What is the seasonal?
Well, it's usually just right around the beginning of April. There's usually sort of the switch gets flipped, but
So
that's again, it's a very general type of way of looking at it, obviously. But
okay,
yeah, we've seen. You were talking about the relationship to equities, and that relationship is just. I mean, it's just sort of broken down more and more and more as time goes on here.
yeah, I know.
I mean, it's still there, but it's. I'm sure somebody's trying to arb it, but
So you're saying that the seasonals going into this month would be negative for U.S. dollar yen?
pretty much, yeah.
For how long?
So for how long? I mean, theoretically into the next cycle, which would be, into October
Wow.
ish.
Oh,
So
interesting.
yeah, well, again, this is just general
Yeah, but
info I'm looking at.
are
This
these
is-
seasonals something that you picked up from someone else, or it's your own work? Where do you go to get these seasonal outlooks?
Oh, well, we have a team I work with, and they're basically putting together the data.
Okay.
So
Well,
yeah,
that's
we've
a
got.
pearl. That's a pearl because I didn't know the seasonals. I believe Adam Button said the seasonals were positive in March for U.S. dollar yen, and it didn't
That
look
would.
like it was going to happen until a week ago.
Mm. I mean, when you're looking at something like that, to me, that's not a trade there. That's sort of, just a foundation, a sort of a setup.
Bias?
And I mean, a lot of that stuff is just, it can fall apart, just like any correlation or
Right.
anything else, it can unravel. So you got to kind of take it with a grain of salt. And, and you need to dig deeper because you can't or I couldn't just base a trade on that kind of general overview. To me, that's not even a foundation. There needs to be more there. So that's what we do, though. It's you're setting up a longer term position. You're looking at a lot of information, especially in this market. So
Okay. Do you follow any of the outside markets? Gold had a nice rally going into starting late last year, peaked about 2 weeks ago at 1390. Any view on is this a pullback?
I honestly, I do not trade a lot of gold
Okay.
at all. I'm able to, but I don't. But just because it's not really worth it for us, the way our system works or our models work.
Okay, that's valid.
Well, it's more of a leverage issue.
Okay.
Because here in the U.S., our leverage on gold is basically nil.
Right.
So there's really only so much we can do with
Any
that.
view on the commodity currencies, the Aussie, the Kiwi, the Canadian?
At the time being, actually, let me just get something there for that too. As far as general overviews are concerned, I'm getting a lot of notifications here today. Sorry about that. I don't mean to be distracted. Just in general, once again, we're sort of looking at a pivot point right now in price for a lot of those. We're just sort of, we're in a base valuation zone.
Yes.
I see no reason. I think the trends still have a little blood in them. But again, we've also hit some pretty significant targets so far. So I can't really say, again, one way or the other. And this is kind of how I go into things, by the way.
Yeah.
I have a lot of, I don't like to make a lot of assumptions or longer term assumptions.
Smart.
So, well, it's hard when, we get into a conversation like this and I just, I don't have a lot of bias, because I don't, for me, it's sort of taking everything one day at a time. But that's just, what I've been able to handle.
Evolved into.
Pretty
All right.
much.
So, I
That's
mean,
exactly what I'm
obviously,
looking at.
there was a reason for this process taking place. That, especially, I've noticed in these markets the last several months that looking for trends for more than 72 hours is a lot to ask for.
Yeah, I mean, the longer term you play, the more of a fundamental game it really becomes, you know. And there are those that are, you know, they make great economists and terrible traders. You know, there are very few people that can take a completely fundamental outlook for this market and, you know, see it realized in price action. The instances are rare and they're usually pretty common. You know, like if, let's say, an interest rate, you know, announcement came out, completely caught off everybody off guard. You know, obviously the market's got a way to price that in to the market. So, you know, things like that. But you're right. I mean, the window of time is only, you know, you've only got so much information to work with, and in that certain period. So, you know, that's sort of what you got to go for. And I find technicals hold up better over smaller periods as well. Anyway, you know. So that's why I put a lot of emphasis on what I do.
Okay, well, thank you for joining us today, Steve. I encourage people to follow Steve on Twitter at No Brainer Trades, and that's also your website address, www.nobrainertrades.com.
Yep.
Okay, what was the most important lesson you learned early in your career? Did you ever blow up an account?
I'm not the blow up an account kind of guy, but you know, I was always pretty much under control because you know, when you're working in an environment, that's all they talk about.
Right.
You know, but at the same time, what became the hardest thing for me to get over was understanding why price is turning in certain areas and why it's not in others. And so what I would basically do is go back through the charts and basically stare at a turning point until I understood why it was turning at that, you know, specific spot. And that's, you know, how I ended up with basically all the methods that I talk about today on the site.
Okay, so and what are the key elements of a turn? And we'll wrap it with that.
Basically, the big thing is a full natural movement has completed, and you're back in an area that had heavy interest at one point in the future, or excuse me, in the past.
Looking left for the area.
Looking left for the area, but not even that. You know, again, that those natural movements, and again, that's why I use measured moves, basically allow a full cycle of price. So whether it's going to be an aggressive cycle or it's going to be a light cycle, you know, once those objectives get hit, you know that price is basically going to, you know, take a breather at least, you know, before you go on to the next one, because everything for me really is sort of an if-then statement. If this happens, then we go here,
so,
etc.
Do you use pivots, like weekly pivots for those areas? Fib retrace levels for those areas?
Yeah, I don't use pivots, but any numbers that I come up with are basically based on heavy confluence. So the measurement itself has to be derived from something that had heavy confluence in the past.
Okay.
And or if I'm using just a horizontal or diagonal support and resistance level, same thing. I look for as many hits on that line as possible. So we've got an obvious suspect for, you know, turning points or continuation.
It was great meeting you on Twitter, Steve. Let's keep in touch, and
Sounds good.
Good hunting, buddy.
Okay, thanks, Dale.
Right,
Appreciate it.
See you, Steve.
See ya. Bye.